It's Monday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Mike Baudendistel is back with us and he's going to give us a rail intermodal update. But first, we're going to go to Zach Strickland himself and get a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Monday Carrier Update presented by PowerFleet. I'm Zach Strickland. So let's get a quick intro to see what we're looking at in terms of capacity and volumes in the freight market today. Looking at our outbound tender volume index here in blue, we can see that it continues, or I should say the outbound tender rejection index in blue. Tender rejection rates hovering right around where they were to end the week last week, around 17.5% on the outbound tender rejection index. Not a lot of movement over the weekend traditionally because there's not a lot of volume moving, obviously. Outbound tender volume index, however, did take a slight uptick over the last couple of days, indicating that we can still expect this upward trend of volumes to continue through the last little bit of July here. Again, very unseasonable in the way that this is moving and shaping up. Tender volume index almost at that 13K point where, that would be another all-time high for the index. Again, as volumes continue to expand through this very unusual period of time. So where in the United States are we looking for these volumes to expand the most? This is our outbound tender volume index tree map. So basically the weekly change in percent is that big number you see there in the middle of those blocks. The absolute value of the outbound tender volume index is there underneath those. So Atlanta, Georgia, for instance, the largest outbound point in the United States right now, dropped about 2.4% in volumes week over week. Ontario, California, the second largest market currently, dropped about 0.6%. But pay attention to these green boxes because those are the ones that we saw significant increases. We have Harrisburg, Pennsylvania really sticking out here, one of the largest markets in the United States, up there in the Northeast, taking a 15% jump week over week in terms of volumes. Very important to note, especially for any carrier entering the Northeast right now. Anybody thinking about accepting volumes up there, looks like there's a lot of activity going on. Look at down here, just underneath Harrisburg, you've got Elizabeth, New Jersey, 1.5% up week over week. Allentown, Pennsylvania, just up the street, also showing a slight increase as well. Throughout the rest of the country, we're looking at, a pretty sporadic, kind of almost a shotgun of freight volumes increasing. We've got the, Joliet sitting out there in up around Chicago, taking a 2% increase. Again, another large Midwestern market. Savannah, Georgia, 20.3% up as well. So anybody going down there to the coast, we're still seeing a pretty big influx of port volume starting to accelerate a little bit. Mike Baudendistel coming up here may talk about that here in a little bit. St. Louis, Missouri, San Francisco, both showing really significant increases on those volumes as well. So the Midwest and West Coast continue to be relatively active in that regard. So looking at our weighted rejection index. Now this is the combination of our outbound tender market share value and weekly change in tender rejection rate. So this is going to be where do I pay attention to today for my increased opportunities on the spot market? Should I expect upward rate pressure? Should I expect downward rate pressure depending on the direction? Looking at the map over there, you can see that red in Denver showing a dark red, showing that means that the weighted rejection index has taken a really strong tumble week over week. Do not expect the same level of activity in that market that you saw last week, especially if you're talking about accepting loads in there. Maybe consider another direction. Denver looks like it's softening rapidly right now as tender rejection rates are probably falling. Now, the blue markets on here are very interesting. We're looking at the biggest markets in the United States showing the strongest increases in tender rejection rates right now. So these freight market hubs are showing capacity issues. That's a sign that the overall market is having capacity issues right now. Out there in Ontario, California, Atlanta, Georgia, Stockton, California, so Northern California even having a little bit of capacity. The West Coast has been one of the more active spots in the United States for having capacity issues, but Harrisburg, Pennsylvania over there, again, Harrisburg and Allentown, Pennsylvania, both in the top 5, showing the strongest tender rejection rate increase. Here's the Harrisburg market right now. And looking at our tender rejection changes, it looks like short haul and local freight is driving a lot of this market volume right now as the strongest amounts of volume, but overall rejection rates are up as well. Head haul index volatility pretty decent, but rejection and volumes both showing pretty significant increases in volume. So if you're heading up there, be prepared to haul that short haul freight, but you might get a little extra few dollars for it. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to the Rail Intermodal Update. I'm here with the one and only Mike Baudendistel. Mike, what's the latest?
So the latest is I'm taking a close look at maritime import shipments. So those are critical for intermodal because about 60% of intermodal shipments are imports if you include those that are being transloaded in addition to the international intermodal shipments. So this year with maritime import shipments, containerized and non-containerized, we have this on the board. It's been a wild ride. Remember with COVID, all those factories shut down, so it was way below last year. It slowly sort of gradually picked up, and then we had this huge spike right at the beginning of May. After that, a lot of the carriers cut back on their capacity, blank sailings. We were well below last year's shipments in May through June. Now we're getting back to the point where we're roughly in line with last year's level. So very similar to the intermodal traffic data that's only down a couple % year over year. And remember last year, there was really no major peak season. It was kind of a muted peak season. You sort of see this in yellow, which is 2019 volumes. No big peak at the end of the year. It did sort of tail off at the end of last year. When we look at what's happening with the ocean carrier rates, a couple of things are just really interesting about this chart. So in orange, we have the rates from China to the West Coast, in green from China to the East Coast. So both of those are well above where they were a year ago. But both seem like they're not going to go any higher, and in fact, I think they've both peaked, are past their peak. What happened, really is it's dominated by three ocean carrier alliances. They all cut back a lot on capacity. Some of the companies got basically bailouts from their respective countries around the world, and they really were aggressive about propping up those rates. I think cut capacity too highly, and in doing so, the shipments got delayed. Rates were high. Now they're bringing some of that capacity back online. There's going to be fewer blank sailings in the third quarter by a wide margin versus the second quarter, really starting this month. So you're seeing those rates start to come down, and it's important in blue is the spread between the rates going from China to the West Coast to China to the East Coast. So that is at a very low level, $563 a container. And so what that basically means is that shippers are willing to pay a premium to get those goods to market quickly by going through the West Coast, even though that means they're going to pay more on the surface, being further from those consumption centers. So speed is taking priority over cost at this point, given the delays earlier. Here we have some brand new data, data presentation that's in Sonar just as of last week on the 3PL Summit, and just all sorts of data you can go in here and customize and look at various lanes and those things. But this is just for the country as a whole, and a couple of things stand out to me. Is first, when we're looking at this next 7 day of shipments that are coming out of China, we're looking at that being up 40% year over year. So just really, I guess for the nation as a whole, 40% for U.S. imports, 40% year over year. So a big, you could see another spike here, coming in the next month or so. It may be maybe the peak season that we didn't see last year, and maybe earlier than you would typically see. You wouldn't see that spike until maybe the end of September, early October. We may see that given the sailing times in August. And then another thing that stands out to me is if you break this down by ports, most of the West Coast ports are showing growth, and most of the East Coast ports are kind of flattish to showing a decline, which also supports what I talked about earlier, which just speed being more important, getting that and the shorter sailing routes into the West Coast for speed.
Excellent, Mike. Thanks so much. We appreciate this insight. This is a lot. I love the new format, and I love the new setup of this new Sonar indice. Anything that you're working on, any reports that the people at home should be watching for or waiting for?
Well, working out a lot of just ways to see, how to put this together with some of the stocks, and just sort of going through the earnings reports in the second quarter and seeing, okay, just how much do those tie to some of the data we already have in Sonar, and what would we have already known, just watching Sonar quickly. So we're looking at things like how, J.B. Hunt's volumes really sort of improved throughout the quarter. It was actually up, their intermodal volumes up 5% year over year in June. So some of those things, tying those to our domestic intermodal shipments and those things.
A lot of new financial applications, it sounds like. Mike, thanks so much. We appreciate your insight. And thank you so much for tuning in. That's going to do for this Monday edition of FreightWaves Now. But the content doesn't stop here. As always, we're streaming around the clock, so check out our FreightWaves TV app and all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.